All right, welcome everybody. John Person here. We've already done all kinds of tests, sound checks, audio checks, video checks, health checks, breath checks. Everything's good. So thank you and welcome. Lots going on in after hours. We have a few earnings, Disney, NVIDIA. Most people want to know what's going on. We'll come up and share that in just a second. Today's presentation is an update on the Person Algo optimizing product, and this is something that we had followed through with an exciting jam-packed session in Las Vegas. If you were at the Traders Expo, which we gave you guys an invite to be here for today, you know, at one portion of the event in that 4-hour workshop, I know there was no more chairs and people were standing in the back there, kind of thrilled to see what was going on in the world of I guess you want to say John Person. Things developed pretty well, and I know a lot of people were excited, and we carried that over in an afternoon session. So today's session is designed to follow up with that and follow up with where we stand right now with the markets and how we're taking advantage of the markets, which seem to have finally broken with some volatility, which is good for traders. So that's one thing. It sure beats an average true range of 6 points in the S&Ps now that we've expanded today, which is more of almost a 30-plus point range today. So that was kind of a good day. Before we begin, please take a moment to read this important risk disclosure. Trading is risky, and again, past performance is generally not indicative of future results. All right, so computer algos. You guys have seen this. We've done this before. What do we need to help us with trading? We don't really, I think the general public and the small speculator individual has an idea. Algo trading has been around a long time. It's not new. It's just a new buzzword. It's like cloud. The cloud's been around a long time. It's just a server held at a remote location. These are things that have been around, but they're getting more popularity, and the speed, enlightening speed that is, in which markets are moving, and the technology and the way people and institutions are able to move money pretty much is putting individual traders not at a complete disadvantage, but I think a slight disadvantage when it comes to being able to develop a trading plan and follow through and execute it. We'll get through a couple examples in just a second. Algorithm sequences. Many of you that are thinkorswim users know that we have the indicator called PPS, a very dynamic product, robust. Also, for those who have read my books, we have the high and low close doji, which is a formidable bullish and bearish sequence of algorithms. It's, again, a sequence of things need to happen in order to develop a trigger. Something has to happen. A sequence of events has to happen. So a lot of people have moving average studies that they use, an 8-period, a 10-period versus a higher time frame, or some people use maybe a 10-period moving average versus a 50, or a 50 versus 200-day moving average. And they look for crossovers. They look for the short term to cross over a longer term to generate a trend direction. And there's all different kinds of ways to trade in this market. And now we have a lot of people trying to capitalize on options, and that popularity really exploded since 2007. But I think there's still a dynamic way of trading in the market. And one thing that whether you're not using options but just using outright derivative products or outright equity products is, you know, having the ability for executing automatically, having stops put in, having profit targets. They need to be efficient. Now, a few minutes ago, I just shared this 5-minute chart. This is a 5-minute chart on an E-mini S&P system. This is year to date. It's only up $33,000. It had a new equity high on today. It went long, it got stopped out, it did not take a short. In this whole decline, it did not take a short. And the reason is because something was in there that defined maybe it went too far beyond and started to get into an extreme of taking a short after a decline. There's an algorithmic program. It's not that it doesn't take shorts. It takes shorts, gang. You know, it has taken some short positions, and it's some of these shorts that it's taken, it has shown that in recent history, it's given a little bit of drawdown. In fact, I'm going to share with you the part of what the person, without giving the kitchen sink away, and I'm just going to show you what this person algorithm is all about and how it helps people. This system is defined, and the algo system allows us to program the time frame, whether we're going to take trades in it before certain time frames or after, or multiple slices of time, or get out at the end of the day, and has all kinds of features that allows you to build upon a strategy. And this is the overall performance. One thing that we put up on our website, and so for those people that are becoming familiar with this product, and for those who are starting to learn to use it, that have acquired a license for this, and again, we'll get into that in just a few minutes. But what I wanted to bring to your attention is that this is a kind of a neat thing in the sense that we put up these videos. I'm going to show you the algo system in just a second. But in the website, under the members section, we have all these instructional videos. What's really neat about these instructional videos, and I'm going to go down here and share this, because if we scroll down and we find the E-mini day trade settings right there, this tutorial right here, is the tutorial that actually gives the entire performance for that exact system. So it explains everything from top to bottom. And that was a pretty cool thing to have for our clients that are interested in this product, that we gave actually the settings for them to build upon their own little trading system. So whether you want a 5-minute or a 15, a 60, an end of day, Amazon, Microsoft, whatever you want to build upon, that's what's the nature of this, the person's algorithm. It's pretty cool function. Again, any trade system, and as you know as a trader, we're going to miss trades. But what it is that, you know, if a trade gets out of our comfort zone, or maybe gets away from us, or the risk is too great for the algo settings in a 5-minute basis. I mean, if you're looking at a swing high and you have a sell signal, instead of saying, well, I'm going to take the risk above X bars, or I'm going to take the stop above the prior swing high, whatever that trading system is. I mean, not many people want to take it's unusual to find the market in a short defined period 15 points. 15 points is a pretty big move, which is approximately $750 risk. If you have a system that has a defined risk, do not take any trades if the risk is above a certain X amount, it's going to not take that trade. I think we all understand that's above and beyond our risk factor. So having predetermined risk factors and a function which says, hey, I'll get along, and then if you notice here, kind of a setting that you get long and then the market gets you out, but you can clearly see the labeling, which I did not hide. It says % trailing stop. Well, the market went up, and instead of just blasting straight up and trailing the stop, it did trail a stop. It down-ticked and stopped out, and then the market got choppy. Same thing here, trail stop, it down-ticked right there, but then the thing got right back in. Well, why didn't it get back in again? Well, in this case, it stops trading at a certain time. So it won't take trades, and if it's in a trade and it's still trailing the stop, it has a function that this particular model gets out at the end of the day. So these are all features that are available to program for an individual in the person's optimizer. So we wanted to go through what really goes into a system and how to execute. So when you optimize settings for a time frame you want to trade, whether it's a 5-minute or a 15-minute, whatever your time frame is. Remember, the higher the time frame, probably the less frequency of trades, right? So that all depends on the individual's unique tolerance of risk. Obviously, the shorter the time frame, sometimes the lower the risk. Now, here's a situation where a different model has some pretty neat things. This is going to carry over. You can see it's long 2 contracts. It's long by the nature of taking that long right there, and it's still long into the overnight. We'll see how this carries over. Here's a trade situation where it went long and it held it over and then exited, and you can see why it exited. It exited because the normal time frame for the trend to mature on average, it hit its maximum bar. So there's a time feature that this product allows you to also optimize. So there's a lot that goes into this product. So obviously choosing to either get alerted to those trades or have those trades auto executed for you is one of the really neat features that you can utilize your capital more efficiently. What do I mean by that? Well, let's say when you have a automatic system generating signals, and you have already pre-programmed something that says, listen, if it's got too great of a risk, don't take the trade. It's not going to alert you, hey, do you want to take this trade or not? Does that make sense? I mean, that's fabulous, right? I mean, everything looks great in hindsight, but in the heat of the passion, if in that moment that you're looking at the markets and you say, gee, do I want to get into that trade? Or perhaps, oh, the market's diving and I've been dying to get short this market. Wait a minute, the risk is too great. It's outside my rule book. Don't do the trade. That's kind of the neat thing that helps with a automatic trading system, and that's what I mean by it allows an individual to make those decisions, or once you develop trust in the system over time, you can generally let the system auto-execute itself. And your biggest worry is to make sure your internet connectivity and your computer is working. So you're not really monitoring the system as much as you're monitoring your connectivity and your equipment. That's the big challenge. So this product that we've introduced and allowed retail traders to acquire is pretty neat in the sense that, as I just pointed out, we can set time zones, we can set time frames, and we can set different position sizing methods. We can trade on a, hey, I only have $10,000 in my account to trade, and so if the margin's 5,000, then I'm only going to do maybe 2 contracts, or I only want to trade 2 contracts. Or another feature is, hey, let's say I only want to risk $1,000 per trade. Put me in as many positions as $1,000 risk, and if you have a $300 automatically calculated stop loss off a signal, it's going to put you in 3 contracts automatically. So it'll adjust your position size. So that's what we say is this particular thing will automatically allow you to auto-execute in your account, but you can also before you actually fire off, it'll give you confirmation. If you have that little function turned on, you hit OK, guess what? If it says on with confirmation, a box will pop up. Do you want to do this trade? And then you have to hit yes to say yes. So you could do it with confirmation or without. You could set the time frames that you want to trade within. You could decide what your position calculated method is. This is very advanced, but yet simple and powerful for the individual retail trader. It kind of gets you on the same level playing field as what you would expect a system to give you and what maybe professional traders have had access to for years. So what's really neat about this, it allows you to maybe develop your own system on whether you're trading E-mini S&Ps on a 5-minute, a crude oil, a euro currency on a 60-minute, gold trade, bonds, or one of our favorite exchange-traded note products, the VXX, the volatility exchange-traded note, the VXX. So that's kind of one of the things that I think has been very strong function for people, is that we have the ability to get those trades, whether you want to do futures, stocks, a mixture of both, and trade those according to your studies. Now, as you can see, even in looking at a system that gives you a long entry and holds the position, and yeah, it's a shame, it fires an exit because the max bars expires and it keeps going up. But you know what? That's all right too, because no system is perfect. We want to have the key word cumulative profits and a healthy profit trend in any trading system. And what's neat about this is it's not really a black box system. You know what I'm saying, guys? I mean, how many people have heard about you can rent signals and you get someone else's signals and you know, it trades 10, 20 times a year or 30 times a year, and you're renting it for $150 a month, right? And or some systems you trade 1-2 lots per whatever the contract is that you have. Like, for example, if you're renting a system and it sends you signals and you can only trade 2 contracts for $150 a month, well, it's still $1,800 a year, and you can only trade that one market. This is a product that allows you to custom tailor your own markets, as many contracts as you want, at different markets that you want to trade. That's what's really outstanding and really puts individual retail traders at a far, far greater advantage than most people think right now. So again, this is such a special product because many systems, as I mentioned, they do charge a monthly fee or a rental fee for the year. Maybe it's $2,500. I've seen systems rent for $3,500, and I know a lot of you guys out there are system renters. You know you know what I'm talking about. If you're a TradeStation user, then there's no doubt about it. You do know that there are systems out there because they have the App Store, and a lot of people have advantage of looking at that and the different performances. The essence of being able to trade a market and saying, hey, here's a simple crude oil. Actually, crude oil just hit another, or it's kind of been going in its equity curve for the year. It's at that, it's just dancing between its peak equity curve. This is, again, a system on crude oil. It trades 2 lots in the market. This system trades 24/5 though. This trades Sunday night through Friday. Current position is it actually went short, and so it initiates trades that because you want to make sure that if there is a big move, you're able to capitalize on that trade. And so looking at different markets of interest in different time frames, someone had asked, it says, well, if everyone has this, or if you're allowing everyone to get this, what if we all trade the same thing? We're going to kind of make our own market move, and no one will be able to get in. And that's not true because, number one, there's limited licenses available for this. But what this does for you as an individual trader, it allows you to take control over your own position size. It allows you to change and optimize your system for your own trade times and your own trading style and capital. That's the key word, and your capital. So some people say, hey, listen, you got this product that I need $250,000 to trade with, or I need $10,000 to trade with. Well, I always tell people that you need to be properly positioned and properly financed in the market. You can't put yourself at a disadvantage. I don't suggest anybody to trade on day trade rates on the E-mini S&Ps or any market, because you're putting yourself behind the 8 curve, and then more than often than not, what happens to people and traders, and maybe you've been there before, you get into a market and now you're underfinanced, and the problem is you start worrying about the risk all the time, and then you start getting out with little profits, and then the next thing you know, your losers tend to get bigger than your winners. So this is a product that allows you to stay true to the historic performance of the market, but yet also allows you, as the market expands and contracts in volatility, to maintain your system. Maintenance is very important. We don't like to optimize a system. We like to maintain a system. Think of it this way. The S&Ps are the S&Ps are the S&Ps. They really haven't changed in 30 years. What's really changed is how we trade them electronically. We don't really trade open outcry anymore. They're still called E-mini S&Ps. The E-mini S&Ps are still traded at the Mercantile Exchange. The value has changed. What else is, the only thing that's really changed or changes through times is volatility, the price range during the day. Let me share with you exactly what I'm referring to. A guy by the name of Wells Wilder, and I'm sure you're all familiar with Wells Wilder's work, but one of the things that he did that is pretty much standard in the industry in nomenclature is the term average true range. And the E-mini S&Ps right now are at, you know, not tomorrow it'll change, but because quite frankly we had about a 31 and a quarter point range. Look at 63 and a quarter to 94 and a half. That's one of the largest ranges that we've seen in the S&Ps. I think the third greatest this year. But for the most part, if you take a look at the daily chart that I'm showing you down here, we would wake up with 4-point ranges, 6-point ranges. We were sub 10 handle ranges for most of October. Imagine being a day trader and you only have like 9 S&P point ranges from 6 p.m. to 5 p.m. Eastern Standard Time. That's a tough market to day trade in, right? It's a very tough market to day trade in. So what does change in a market? You know, the nature of its direct volatility, right? So what this particular product does is it allows us to expand on, if you're sitting here in periods of very tight, narrow ranges, and you're trying to take 5 or 6 points. How do you take 5 or 6 points of profitability on a market that only has 6-point range during the day from 6 p.m. to 5 p.m., the overnight action included? It's darn near impossible. So you need to be able to maintain the structural system. And another thing you need to do is maybe you're on the right course and you're in a bullish mode, but your holding period has to be expanded. So your max bars, the time frame it takes for the market to get from point A to point B, because there's a lack of volatility, we need to address that. So that's part of what defining a trading system is about, that average true range, the part of volatility, gang. And that also is something that helps us to define our stop losses. If there's narrow ranges, most people have this idea that when volatility contracts, we need to increase our lot size. And the problem with that theory is really simple. The day you increase your lot size because the volatility's decreased is the day the volatility increases, and you're normally a 2-lot trader, you jump to 10 lots, and then bang, the day you're wrong, you're overly leveraged because you weren't addressing the issue of change of volatility, which is at times unpredictable, right? So the Algo Optimizer allows you to custom tailor the sessions that you want to trade, whether you want to trade from 2 in the morning to 5 in the morning, Eastern Standard Time, European, whether you want to trade block hours or optimize and find out, hey, what is the best time to trade? That's kind of a neat feature, right? Wouldn't it be nice to say, hey, when you get a buy signal, what's the best time that the signals are working in this environment? Is it better to trade in European? Is it better to trade after the open? Is it better to trade at 12 noon? Is it better to stop trading at 2 in the afternoon? I want to know one thing. I want the edge to help me make money. That's it. I want the edge to help me make money. And that's where the computers can help us, and at least a product that can help you optimize the best time of day under the defined risk that you're willing to take. And then you can build upon that. And also the quantity you want to trade, the markets you want to trade. And here's the best part. What if we have an ability to maybe have an idea that, hey, while the market's in a bullish mode, trending higher, and define bullish mode. Well, we've been in a fairly bullish mode in the market. And when we take a look at what's changing right now, this is a page that we utilize for helping us to determine the strength of or weakness of the market for stock indices. We look at a special volume indicator, which is called the person's volume indicator. It takes a look at volume changes in terms of percent rather than absolute. And it kind of helps us to uncover if the market's trading higher and if there's divergence. And in fact, if the market in the S&P is going up and the volume's not and it's peaking out, it's giving us a warning that something's changing. We also utilize these things called person's pivots to help us say, hey, what is the market doing as it gets close to a resistance? Is it formatting higher volume levels or not? And this is the advanced decline, which is easily accessible on many platforms. This is looking at the advanced decline, the advancing issues versus declining issues on the S&P 500. Since I'm not trading the NYSE, we can take a look at the S&P 500. And this is a cumulative total. As we see right now, there's something funny going on with the market. I mean, the breadth of the market, the advanced decline cumulative ratio is going sideways right now. But as the stock market was going up, guess what was happening to the breadth? For the first time this year, the advanced decline was not moving up in concert with prices and the S&P 500. That's an unusual sign that something's coming down the pike. Now let's take a look at the NASDAQ composite. So this is a divergence warning of, I'm not going to say biblical proportions, but the NYSE is a little bit more reliable. But we're going to take a look at all top stock indices before we go forward. This is the NASDAQ composite. As price is rising, we're starting to see weakness relative to smaller, less capitalized weighted stock going down. So that's not showing that there's strong breadth in the market, right? That is a perplexing situation for those that are continuously being bullish at the market while we're at pivot resistance. This is another example that the first time this year we've started to see the breadth depreciate significantly over time. Now, let's look at the NYSE. This is the New York Stock Exchange Composite Index. I'm going to give this another day, and this will be for Friday. But man, if we close 2 days below a prior low, and we can start to see a moving average function, and I wrote about this and how to use this in a book back in 2012 called Mastering the Stock Market, a whole chapter devoted to the breadth analysis. A lot of pioneers in this work did some fantastic stuff, and you're probably familiar with Sherman McClellan, Richard Arms, et cetera, et cetera. Greg Morris did a wonderful book on it. Greg's a great guy. A lot of good people have been using breadth analysis to help us. And as you can see, we're kind of sitting in a trading range on the NYSE, right? I mean, would you define that as a sideways range? We can't really break down. But if this thing starts to lead the way lower, and we start to make more of a trend lower, then I'm going to be more prone not to take buy signals in the market as we start to change the condition of the market. You see, that's one of the structural changes that can help us to do what is pertaining to this comment or this bullet point right here. We have the opportunity to take longs or shorts, or we could take both long and shorts. So if we're in a time period where we start to see the market roll over, maybe now's not the time to take buy signals anymore. Maybe we should just look for rallies to sell as we start to get, if the market gives us more confirmation that we are at an interim peak in the market. So we can control whether we're taking longs and shorts in the market, which is something unique that a lot of people don't have advantage of doing. So that's one of the things that I wanted to bring, that I think that this is a product that really, as I wanted to highlight, allows people to literally custom tailor their strategies and the way they trade in the market. So the person's algo system, this product, it's not just buy it, go away. It's ongoing education. We have a decisive training manual. We have online video instructions with step-by-step. In fact, I think I shared some of those with you, gang, which was pretty interesting in the sense that when you look at these, and I'll share with you as soon as I get this out of the way, and I'm going to show this to you one more time because I think it's for those that are interested in saying, you know, I want to get an edge in the market, then this is that opportunity. So let's go over here, and we're going to go to the Algo Optimizer. So not only are we sharing with you the different videos that give instructions like my thought process, and this is a little example using a 10-year back test on IBM, or we have question answers that we had as a result of one of our ongoing educational videos. Every single section 1, section 2, money management part 2, day trading tutorials, day trading filter tutorials. But to help people say, listen, we want you to understand how to build on a system, here are my settings for a 5-minute S&P day trading system. Here's a 90-minute spider strategy setting, and we allow people to build upon that so that they have something to start with. Or another one we gave out is this Amazon, a 60-minute swing trade on Amazon, which is pretty dynamic. And then again, one of our favorite products, the ETN volatility. And that VXX product is something that many of you have already, if you do have it, have received the strategy settings for that. And this is the one that I'm referring to. It's this product right here, the VXX. So this is the overall performance in the last 10 years. And so if some of you are avid strategists and enthusiasts in trade systems, you'll notice that not all systems make profits every single trade. What we're looking for is an equity curve that starts a pretty smooth curve with very limited. We don't want something that looks like this, jagged. We want a smooth equity curve. This one here has a pretty dynamic function as far as a Sharpe ratio of almost 50%, a return ratio, and you can see that over the last 10 years using the volatility index, the VXX, or since 2010, not 10 years, I stand corrected, since the beginning of 2010. So this is now almost over 7 years old performance. It's actually 7 years, 9 months. How's the efficiency rate of this? It actually only traded in the market 70% of the time. And that's a pretty good rate of return, especially when you consider it's up close to 3,000%. The profit factor is pretty decent, and its overall general drawdown function is pretty darn good too. So especially intraday peak to valley, and again, max trade closeout function. So this is a pretty serious product and a serious, and one last thing, just to show you the periodic returns, and we can look at either annual or monthly. Not a bad rate of return on some of these, months we go through and take a random setting. I mean, obviously this was probably in July of 15, a bad month, but the very next month, and then 2 months later, a pretty serious upkick in its performance. So rate of return is just absolutely outstanding. So this is the actual settings for this is part of the program for those that are interested in the VXX. And what I gave out the other day was for our members was this little product on Amazon. Got a couple little kinks in the armor here. This was one that actually was, you know, a little scary because this was a trade that had identified a long right before earnings. And then the day after earnings in the trading room, and many of you guys were there that day, I said, oh my God, this thing fired off a long of the day of earnings, which makes sense because usually speaking, after a more than a 2 standard deviation type of move on an earnings, generally you get a little bit more follow through the upside. So this thing's not afraid to trade. It buys when most people would say, I don't know if I want to do that. It gets you out. It gets you short. It gets you out. It gets you long. This is a holding period of at least 2 to 3 days. As you can see, here's a long, and it took time to fire off over almost 4 days. And so you can see a pretty decent equity curve as well year to date on that. And this is part of the settings that we gave. Now, what's neat about this is there's a couple functions that we may be able to help people cheat a little bit with. And instead of saying, hey, gang, here's your long, and here's your stop, and here's your first profit target, and here's your max profit target. And an option trader might say, well, you know what? Maybe ahead of earnings, we just fired off, and or just on a normal trade, here's your entry on your short, there's your stop. Stops are orange, and your profit target's yellow. But if something goes wrong, a trailing stop feature will take over. Here's a long, and here's a stop, the orange, and that was the profit target. And you can see trailing stop took over on that particular trade right here last week. So it's a very efficient tool. We can also go through and hit format strategy. And if those disturb anybody, we have the functionality to hit FALSE, type in false, and what are we doing? We're getting out of it. Boom. So now we don't have to look at those lines, and we can just look at the actual trades rather than the profit and stop loss targets. You'll notice also probably here it's got 253, 252, 249. It's not stagnant, 256, because this is actually based on a calculation trading on a particular account size, and it automatically calculates how many shares you should be in based on your own settings. So that's kind of a neat little part of the function of that we were describing about the optimization. So an incredible tool for putting together trading plans in actions for traders and giving you a better edge, especially for those, and I don't know if we all can relate to this. When I was in Las Vegas, and I sat there and I said, how many times, and we've all done it, we sit there and we wait for the trade, and it's like, hey, I got to go get a cup of coffee. Hey, I got to go to the bathroom. And the minute I come back, bang, there it is. Or the minute I see the signal and I want to go after the trade, by the time I put my hand on the mouse, the move's already happening, right? And nothing, and all of a sudden, boom, it happens, right? So that's part of what this helps solve that issue. And I think it's as for those traders that are looking to enhance their their participation in the market, this is an incredible product. The fact that we get, and we will be having, free upgrades and new feature updates. We're working on one right now, and I don't want to get into it, but it's one that will allow you to trail the stops a little more efficiently and be able to optimize. So this is kind of a neat, I will get into this because this is kind of cool. This will enable us to optimize whether or not a market, a particular market, so whether it's 15-minute E-mini S&Ps, whether it's a daily chart on Microsoft, whether it's a weekly chart on IBM, whatever. What works better? The PPS sell and buy signals or a high closed doji pattern, which is what that orange signifies, a high closed doji with that long entry on the 15-minute. Now, the current version does not allow us to do that. But, you know, I think it would be a lot better if we said, well, do we get a lot of high and low close dojis in the market? So I'm going to go up here to Format. I'm going to click on Format. And so as you can see right now, I want to buy with a PPS, I want to sell with a PPS, and it's true. I want to buy with a high close doji, I want to trade a low close doji. They're all on true. Well, some systems and some markets, we don't get a lot of high close and low close dojis. They're false readings. So guess what? If I can be able to optimize, do we get better results for high close dojis, or do we get better results with PPS? And that's going to be in the next version. We're working on that right now, which is extremely exciting to find out, hey, I want a better way. I want to filter out some of these trades. And so I want to define whether or not, hey, I just want to take certain algorithmic buy and sell signals. So that's kind of a neat feature that's coming, and that's part of what we're defining by, hey, that's an upgrade, that's a new feature update, and those are free. We get that pushed out through the App Store on TradeStation. Now, if this sounds like something that everyone's interested in getting, it comes with a couple things that we got to talk about here. So it is a one-time purchase fee. So there's nothing to rent. You don't pay, but you need the person's, to make this work, you need the person's lifetime package, which includes my scans and radar screen, which I can't understand why people wouldn't want anyway. We have 34 licenses left. Let me tell you about that situation. We're negotiating with an entity who's looking at a possible acquisition. We were agreed that we were going to have so many licenses available, and that's it. So this is not something that's getting mass marketed. I'm presenting this to my own community. If you were at Las Vegas, I mentioned it, and you did not hear me push this, and you did not hear me pull out the everyone buy this thing. It was kind of very subtle, because this is the kind of thing that's taking care of itself. But it's also for serious traders. Someone asked me, hey, I only got a couple thousand left in my account. Is this for me? And I said, no, it's really not. I mean, I hate to say that, but this is for someone that is an active trader that wants to manage their own accounts and wants to auto-execute multiple markets. I mean, this is not a product for the inexperienced and a low balanced equity trader by any stretch of the imagination. And so I'm not saying, hey, you can't have it. I'm saying that I don't want someone that this is a robust product for a hedge fund, pretty much, go and for someone that's only going to be trading maybe a day trade once in a while. This would not be for that individual, right? The education and, more importantly, the strategies that we have given out between the VXX, the Spider, the Bitcoin, GBTC, that's another neat little product too. Crude oil strategy settings, Amazon, and we've added a few more features. For those individuals that are interested, we do have a bundle package discount, meaning this with that, you will get a 10% if you're not a current user of the person's lifetime. Now, this is the next thing. You need to have an account with TradeStation. So I'm sorry, but we don't have this available. This is nothing that could be created easily on anyone else's platform. So it's not on Fidelity. It's not on Schwab. It's certainly not on my favorite, Thinkorswim. So this is a TradeStation only product. And that is the nuts and bolts of what its cost structure is, what it does for people, and how we're using it right now. In addition, I do want to let everyone know that at the end of this month, we are using taking advantage of what topic is called the Algo Seminar. It's a 3-day investment seminar for active traders. It's going to be held right down here in sunny South Florida. Now, we have a nice group already signed up, But if you're interested in learning more, yes, we will be giving more information and defining this product at this seminar. It is not a day trade seminar, but it's more geared for active traders, whether it's swing trading, whether it's mainly just stocks, and how we integrate using the person's overall trading system. So whether that is my complete proprietary scans, which is a neat, by the way, today, let's see, in the S&P 500, we only had one, which is pretty weird. Kellogg's generated a new fresh daily buy signal in the S&P 500. As for sell signals, Southwest Airlines, yeah, the airline sector is getting ugly. AMD, another daily sell signal. BlackRock, Rail, CSX, those were all new, fresh, daily little sell signals with volume behind them. By the way, I want to just do a quick little, just for the heck of it, this is my buy signal using, and something we cover in the trading room, in the S&P, the NYSE, and the NASDAQ. So I want to make sure I'm using everything all at once here. We generated approximately 205 just non-filtered. See, it says how many buy signals occurred in those markets today. I mean PPS signals. And let's take a look if we could go into any one. Juniper Network. Everyone's familiar with that. So Juniper Network generated a PPS buy signal on a day like today. So we had a total of 205 stocks generate fresh buy signals. Target is one in service. In retail, Abercrombie and Fitch generated one. I don't know about this one, but this is man's most hated store during football season. When your wife on Saturday, when you're watching, maybe don't forget this weekend, gang, Notre Dame game, big game this weekend, Saturday night. If it's Saturday night, wife says, hey, look, we got guests coming for Thanksgiving. I need you to go with me with Bed Bath & Beyond to shop for new towels. That's my definition of man's most hated store, all right? But Bed Bath & Beyond, for whatever reason, it just shares with me, it generated a daily buy signal. What I think this is, what I try to explain to people is there was a huge, with today's market action, there was a huge flow of capital that went into retail apparel, it seems. American Eagle Outfitters. You could see Tangier's Factory Outlet. Now, that is not, that's where, you know, most people are familiar with outlet malls, right? There's a few of them. But we're starting to see, I mean, Shoe Carnival, a concentration of money went into retail. So retail, there's Dillard's with a big pop, Dollar General, big concentration, by the way, today. Chico's, not that I'm going to be a big fan of buying Chico's stock, but it just shows there was a concentration of money that poured into that sector today. We had kind of a rotational grind into that area. Let's take a signal 4 manifested for us. What generated sell signals today? More than double. More than double the amount, and let's double check something so you know I'm not cheating here real quick. NASDAQ, nice, S&P. Not cheating, but forgetful. Here's what I mean by that. What if I only had S&P 500 running buy scans and I had all of these running sell scans, or maybe something was turned off? So I always double check my work. I want to make sure if I'm running scans, I'm running the same amount of sector or indexes. And that's what we want to make sure that we're doing, right? So as you can see, we did have the same thing. We had twice as many sell signals as buy signals. So that's the gist of the person's product. That you get a lot out of this. It's an extremely professional package. It's defining what we are for trading in stocks, exchange traded funds. It defines, breaks down buy signals per anything you really want, daily, weekly, high, low, close dojis, and then we have the radar screen function, which is awesome. All of that is part of why, if you get the Algo Optimizer, why we need if you get the Algo Optimizer, why you need the lifetime, because this runs off of that. You can't run this without that. This has the functions that's needed that is programmed in this. So this was the addition to running and getting your own strategies, developing your own trade systems, and keeping them for yourself and maintaining them for yourself, and being able to auto-execute or discretionarily agree to those trade signals that came up. And that's the incredible power for this. So I just wanted to say that in this environment, I think it's been a very unusual year, to say the least, for a lot of traders in this environment. I mean, there's been something here for everyone except for bears, that's for sure. But I don't think that as we move forward in the next coming months and years, we're going to see an increase, just as you can see already. Crude oil, it was supposed to be at $20 a barrel. It's pressing close to 60. You know, a lot of people thought gold would be at 5,000. Now we've got Bitcoin. There's some exciting changes, and I think that algo and optimization products are going to be hitting the street more and more fluidly. In other words, more access to professional traders. And the retail traders need a product like this. It's just without a doubt. Part of our education is to, when we do these seminars, a lot of people, they're interested, they're not sure, they come down to the seminar and they say, let me learn a little bit more. And this is that opportunity for you. If you are interested in acquiring more information, you certainly can just go to our website. You can go to this link right here, personsplanet.com, algo trading. Let me bring you up the website right now. And we'll go back over here and let's go and check out events. So first off, we have our seminar in Florida. You can click on that and you can learn all about this 3-day intensive seminar right here. Everything you want to know. All right. So it's $14.97 for 3 days, and you'll get a full introduction into the Algo Optimizer. If you're interested in more information on the Algo Optimizer, you can simply hit contact us or go to where we have our products page, and we have our indicator where it says Algo Optimizer right here. And you can learn more about the Algo Optimizer, and there's some great tutorial videos to follow up with what we talked about today. So you can take a gander at what we're doing there and how to develop your own trading, whether you like trading in this example, in this trading model with Tesla on a 60-minute basis, more of a swing trade, or whether it's trading E-mini S&Ps, or whether it's trading crude oil futures, right? So this is a great way of learning a little bit more about an extremely powerful and incredibly awesome product for retail traders. I thank you for your time today. We were making an intro to the follow-up from the Traders Expo, what we talked about in our 4-hour workshop. I said, guys, if you want to learn more about it, we're going to follow up with a webinar, and that way, that was more of a teaching, and this is more of a introductory of a product informational session. So that way you kind of have a better idea of, hey, is this something for me? It sounds pretty interesting, and at least you can't say, well, John, you never told me you had this thing, and now you know we have this thing, and it's already developing quite a bunch of people giving some positive feedback, incredible positive feedback, like, you know, kind of like this thing. And I've gone in and I've helped people with a product called TeamViewer, and logged into their remotely logged into their computers and seeing what people are doing, the pages they're creating, the systems they're designing. It's amazing. It's like everyone's their own quantum algo shop right now with this product. So I'm quite proud, and I have to say this is probably the pinnacle of my career of putting things together for retail traders. It really is awesome. If you're interested, again, the link is personsplanet.com. tradeplanet.com/algo. Again, that concludes our session right now. And I think everyone have a great weekend. We got some folks that are from overseas. You get to go to bed in Europe. Thank you all very much. And we'll see you next time. And I hope you enjoyed at least the intro to an incredible tool that's very powerful for retail traders and professional traders alike. Thank you all very much.